Hello and welcome to another MCO market update on AVAX, one of the most popular cryptocurrencies on this channel. You often ask for updates, and yeah, here's another chart update for AVAX. And I just wanted to highlight again a few relevant levels that really matter now. They're very important, and it is important to understand the significance of these levels because otherwise you might not understand the risk, but also the opportunities that are present on this chart. So first of all, the support zone that has been on the chart for more than a year is located between $12.49 and $16.75. This support zone is support for a B-wave correction. So the idea is that obviously we had a rally between September 2023 and March 2024, and this year currently could simply be a corrective pullback, a three-wave move down, which ideally finds support and starts another rally from this region. This is simply a support zone, an area of interest to which prices would usually react, calculated based on mathematics, Fibonacci mathematics, and the area here that matters is between $12.49 and $16.75. Now, that this area is important, I think is proven here right now because the price has reacted quite substantially to that area in March. We can see there is a rally, or there was a rally of around 55%. The main question at the moment is whether this is a trend reversal already or whether this is only a short bounce before we go down even lower. So even if another low forms, the $12.50 level would keep the yellow scenario alive. And in the yellow scenario, the price could move up possibly towards $89 going forward, but only as long as the $12.49 level is holding. That is really a plausible scenario. If we go higher, however, we also have to consider that the price could find resistance in this area between $25 and $42. And this is highly likely that the price will find resistance there. And why is it relevant? Because the move up from the last low is only a three-wave move up. And that is corrective, and that does not really give us a very clear bottoming structure. We're going to take a look at that on the smaller time frame in a minute. But yeah, this takes us to the blue scenario, which is the bearish one, which is highly likely as long as the market stays below $42.20. So that means the bulls will need to break above this resistance area. There are four levels to watch: $25, $29, $34, and $42 on the way up to unlock prices in the $90 plus region. The easiest way to make the blue bearish scenario less likely would be to watch for a five-wave move up in the yellow scenario. So if the market can form five waves up instead of just three, because the blue wave 2 should be a three-wave move, well, then we can clearly favor the yellow scenario. Now, let's take a look at the smaller time frame for AVAX. And here you just see the patterns in a little bit more detail. You can see that, for example, even in the yellow scenario, another low is at least likely. Doesn't have to happen. It's not absolutely needed. But I need a bearish alternative here because the rally from the last low that formed on the 10th of March is only a three-wave move up. And because it's only in three waves, it is very fragile and can easily lead to another low. That's just related to how markets work. The market can move higher, but the risk is that this three-wave move up will only form a larger three-wave move up. So if we go up higher from here, we have to pay very close attention to the area between $29 and $34 for rejection, for resistance. Only this, which would give us a five-wave move up, so that means one more higher low after the next rally, would clearly favor the yellow scenario. So that could mean we still are in resistance, but if the move up is five waves, it would be more clearly bullish. So these are the things to watch out for at the moment on the AVAX chart. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.